America screws the 90%. America basically keeps the 99% poor on purpose, while rich people get all of the benefits. But this video is to expose a lot of the dirty secrets for two simple reasons. Number one, I want you to get pissed off, because you will when you hear these things. And don't take it out on me, I'm just the messenger. Because again, this could be the most profitable video that costs you no money, which is kind of like making an infinite return on your money. But write down some of these things and go, wow, how can I do some of that? Because everybody watching this video can do some of these things. But anyway, write down some of these strategies and stop giving the government more money. Let's get into this. First, poor people work a job and spend their take-home money. Let's say, oh, I got a phone, or I got a new laptop. You take the money that you earned, the government takes their taxes out of it, and whatever's left you use to pay your cell phone bill and your computer. Rich people do things differently. They say, well, I have a side business. This side business lets me write off expenses even if I'm losing money on this side business, but as long as they're necessary and ordinary, I get to write them off and get a tax check, basically tax deduction for that money. So let's say you spend 30% in taxes ordinarily. If you spend $1,000 on a computer and your cell phone bills in a year, or more or less, whatever, you gotta take $1,000 out of your bank account and you don't see any of that back. Rich person spends $1,000 on a computer and their cell phone bills, they get $300 back when they file their taxes because it's called a business expense. And anybody can start a side hustle, even if it's a money-losing side hustle, and take advantage of business deductions, as long as you have an intent to make money. Which brings up number two, poor people call stuff they do hobbies. Rich people call everything a business and another additional stream of income, or potential future stream of income. See, that's a very important difference. If you make YouTube videos and you treat it like a hobby, that is, you spent $2,000 on cameras and lights and tripods and all this stuff, but you treat it like a hobby and you tell yourself this is just a hobby, it's not a business, well, that $2,000 you spent, gone. Out the window until you finally start making money, but you're not getting anything from the government. Rich people say, I'm gonna try that idea, but I'm gonna take that $2,000 and call it a business expense for my new startup. And that $2,000 is probably gonna translate to $600 coming back to me from the IRS, thanks to tax write-offs. So don't call things hobbies like poor people do. Instead, call things a business like rich people. Number three, poor people say, oh, sweet, tax refund day, I'm gonna buy a new TV. Rich people say, tax refund? Oh man, I messed up. I just gave the government a free loan. I'll adjust my W-4, Google that, IRS W-4, so that way I take home more money every month by adjusting my dependents up. Even if I don't have more children, you could make your dependents whatever you want. And instead, I'll invest that money into either more business expenses, so I get more write-offs, or stocks throughout the year, so I get more rich. Folks, if you are taking a tax refund, you are screwing yourself in two ways. One, you are tricking yourself into feeling rich for a few weeks and then blowing your money on TVs or things that you don't need, and you're giving the government a free loan. Don't give the government a free loan. Bad. Government free loan. They like it. They're like, yes, yes, sure, we'll give you a tax refund. It's just getting your own money back. Government screwing you. Number four, rich people try to call everything they do, and this is similar to number one, but don't worry, we got some really creative things coming up here, but we've got more to talk about here. Rich people try to call everything, literally everything they do, a business. Let's say some dude takes a $10,000 vacation with his family to Ibiza, and he is a day trader, so he shares photos on Instagram of him with his laptop day trading. Yay, look at me, I make money while I'm vacationing in Ibiza. I set my call options and my stride, boom. Now all of a sudden, this person might be promoting their day trading course or their day trading book or whatever it is. They're selling the lifestyle of a day trader, which might be a necessary and ordinary advertising expense for a day trader. And boom, all of a sudden this person just wrote off a $10,000 business expense against their income. Whereas the poor person spends $10,000 on vacation they saved up for and they don't get any discount from the government. Again, poor people get screwed, and get richer. Number 5, poor people oftentimes are more likely to be tenants. Rich people, and I know this one gets debated a lot, but listen to some of the benefits. Rich people buy real estate to lose money. And nobody wants to lose money, right? But right, folks, remember, I said lose money. And there's a very important distinction. See, losing money is stupid, but losing money is smart. Quick example. Let's say you bought a 4-unit rental property and you live in one of the units because you buy real estate under market value. Your tenants altogether pay you $1,000 each. That works out to $36,000 a year. Okay, well, usually if somebody writes you a check for $36,000 a year, you have to pay taxes on that money. It would be illegal not to, right? Right. But rich people know they can take a host of deductions against that income. Property taxes, insurance, maintenance, management, utilities, reserve money they spend, interest, unlimited amounts of interest on their rental properties, all a tax write-off. But on top of those actual expenses, they also get to tell the IRS, oh, but IRS, I'm depreciating the property. The property, it's losing value over time, which means they could tell the IRS they're actually losing money on paper, while at the same time they're actually socking away loads of cash, paying off their debt every single month with their tenant's money, and the landlord gets richer and richer, controlling an appreciating asset while the tenant pays down the property for them and all of the costs associated with it. But we're only on number 6, folks. Number 6. Poor people are like, oh, I don't want to apply for a mortgage because it hurts my credit score. I want to try to have a perfect credit score. Or they don't care about their credit score at all, which is even worse. Don't even get me started on savings accounts. Savings accounts are another poor people scam. Rich people don't save, rich people invest. But that's just a bonus freebie. We could talk about that one all day long in a different video. When it comes to credit, rich people are like, dude, I don't care about my credit score as long as there's a 7 and a 4 in the front. My score does not matter to me. That is, as long as it's at least a 740, credit score doesn't matter. You get the best pricing and anything above that is a waste. So I don't care if I've got a 760, a 741, or an 820. I'm going to apply for loans that allow me to control wealth and assets and grow my wealth every single year. Very important. It protects you against inflation to control assets. Inflation is bad if you save money, but it's really a good thing if you owe a little bit of debt and mortgages, usually the best kind of loans, like a 30-year fixed rate mortgage, and, you invest in assets. Number 7, poor people say, wow, our family of 4 makes $50,000 a year, yeah. A rich person who also makes $50,000 a year, so this is how you can, here's a difference, making the same amount of money here, okay? The rich person says, I make $50,000 a year with my family as well, but I run it as an S corporation. So instead of taking $50,000 in income, I pay myself $10,000 a year in payroll, and I take $40,000 a year in distributions. So I save $6,120 per year in payroll taxes, and because my business nets and makes money, I can write off my health insurance premiums, something only people with a business, when they're self-employed, whether it's a side business or a main business, you have to be self-employed and making income, you can write off your health insurance premiums. So if you're working a job and you have to pay your own health insurance and you don't have a side gig, you're not able to write off your health insurance premiums. Rich people are getting tax deductions on their health insurance premiums. Again, folks, rich. Number 9, poor people say, I'm gonna buy a new $30,000 car. Woohoo! Rich people say, I'm gonna buy a $30,000 car that weighs over 6,000 pounds and that I'll use mostly for business, or at least 50% in business, so that way I can take a $25,000 year 1 bonus write-off via Section 179 of the tax code, saving me, well, let's see, 30% of that, at least $7,500 in that first year in taxes or more. Rich people versus poor people. Rich people are taking, how can I, if I'm gonna spend money, how can this save me money? Differences. Number 10, poor people say, I'm going to donate my closet full of clothing to the Salvation Army because it's the right thing to do and I'm gonna feel good doing it. Rich people say, I'm going to donate my closet full of clothing that's valued at $3,000 and I'm going to ask for a tax receipt and take a picture of all the clothing that I dropped off so that way I could take $3,000 worth of tax write-offs at the end of the year. And guess what? Both people got a God bless you from the Salvation Army. Number 11, Poor people say, hey dude, look, I just traded stocks and made $1,000. Rich people say, I just made $1,000 in stocks. And oh, I don't want to have to pay capital gains, so let me see, I've got some losers over here. Let me offset my win by selling a couple losers and harvest some tax losses to eliminate paying taxes. Number 12, rich people say, when I'm younger, I don't have to go to the doctor much. Fortunately, if you're younger, and that's true, knock on wood, that's true for everyone. And so I'm going to have a high deductible health insurance plan to minimize my health insurance costs. That'll allow me to fund an HSA, which means I get to write off $3,500 in contributions against my taxes towards my health expenses in the future every single year. And this is on top of being able to write off your health insurance premium if you've got a side hustle. And wait for it, your medical expenses that you pay from that account are not taxed either. So here's just an example. Poor person goes to the doctor, gets a $500 procedure, boom, they just lost $500. Came out of their bank account, gone. Rich person says, well, I got an HSA. I'm gonna put $500 in this account and I'm gonna invest it into, say, Tesla stock. And oh, great, now it's worth $1,000, let's say. Well, they're first going to get a tax write-off for having put that $500 in that account, which means maybe they'll get $150 back, about 30%, using 30% as the example, right? So get $150 back. Now, that money's grown in value because they invested it into the HSA, they take the gains on their stock and spend that money on the $500 procedure, and they're not taxed again. It's literally like combining and gaming the retirement system. Tax deduction up front, no taxes on gain, boom, you're making bank. Number 13, poor people are like, my boss lets me contribute $19,500 to my IRA. But I don't got that kind of money to put aside. I don't even want to put aside $1,000. Rich people are like, hello, first of all, if your boss gives you any match at all, contribute every dime you have, because that's literally like doubling every dollar you're contributing, depending on the match your employer gives you. Then, rich people who are employees or self-employed do something cool known as setting up a side business that makes money. And then they open up a SEP IRA, and they can contribute 20% of their income up to an additional $57,000 on top of whatever the heck your employer gave you. So that means rich people who work for, say, Google, and who also have, let's say, a side hustle that makes money, they could invest in their employer's 401k and their own SEP IRA and basically invest a ton of money, all tax deductible. Number 14, rich people be like, I'm gonna invest in real estate to lose money, quote unquote. And I'm doing real estate so much now that I'm going to call myself a real estate professional. Oh, that means I can literally now write off unlimited passive income losses against my active income. Poor people be like, wait, but I thought there was a limit to how much I could write off with real estate depreciation and passive losses. Rich people be like, real estate pro, the game's rigged. If you become a real estate professional and do 750 hours a year in real estate and at least 50% of your time, boom, all of a sudden you are writing off unlimited amounts of money via cost segregation and depreciation, and you're pretty much paying $750 a year in taxes. Number 15, research and development credits. You're probably rolling your eyes like, oh, come on, like what? Who has that? Well, listen to this. If you have a side hustle or business that has ever done any of the following, you could qualify for some probably research and development credits. Developed or designs new products or processes. Products or processes? Come on, like anything could be a process. Or enhanced existing products or processes. Okay, so I don't even have to come up with my own product. I could just make something a little bit better, marginally better for my business. Then I could qualify for R&D credits, or quote, developed or improved upon existing prototypes. Okay, interesting. Now, you're in business and you might be able to write off 20 to 25% plus or minus for research and development credits, on top of being able to write off the expense itself. Yeah, boom, now you're in business.